Good morning, everyone. Let's look at your markets for today. We'll start with the economic calendar as always. So the Aussie had some really good employment data coming out. Unemployment rate is much lower than forecast and much lower than previous. That's really good for the Australian economy. This is a really good sign for them. I think they're just booming. It's a country that's pretty well managed, I think. So yeah, that came out. The Kiwi New Zealand dollar had gross domestic product quarterly figures coming out as well. That was slightly better than expected, with an amendment or revised figure for the previous as well. Then we had the interest rate decision in Japan that remained the same. Then later today, we've got the euro has consumer price indexes coming out. Then the big one, the pound interest rate decision, we've got this coming out, and then obviously meeting minutes. So definitely got to look to trade that. And then later on, there's building permits and manufacturing index on the dollar. Now, if you saw the prices yesterday after the interest rate decision for the dollar remained the same, but the press conference and a statement had a pretty bullish sentiment or hawkish view. So this was better than expected for the dollar. So the economy is or monetary policy is looking good for the dollar. There's been some really good moves on that, which has provided some great opportunities on a few currencies, one of them being gold as well, as a commodity. So yeah, I mean, we're going to look for today, we're looking at the pounds interest rate decision. There we go. Going to look for those and the meeting minutes, etc., and see if we can find an opportunity there. And then jobless claims, we might potentially look to trade that as well. So yeah, I mean, this is at 1 my time. That's in about, I'm at 7:45 now, so it's a few hours away. 5 hours, 15 minutes away, give or take, I think. Yeah, so that's what we're going to look to trade, is the pound interest rate decision specifically, and then wherever we can find any other opportunities. We've got the CPI on the Eurozone, so that could be good. And I'll obviously try and trade that as well. That's almost coming up 3 hours from now. So okay, let's look at the technical summaries. I expect to see the dollar stronger. So yeah, S&P pretty neutral, DAX neutral, FTSE neutral, Euro neutral. So we've got just about everything neutral. We'll look at the commodities. Gold down almost 1%. Silver down 1.5%. Now this is where the opportunities lie. You know, ever heard the term buy the dips? That big push that the dollar had pushed gold down to levels where you really want to get in. So buying the dips is definitely something we'll look at on gold specifically, and silver as well. Then on Forex, we should see gold strong. I mean, the dollar stronger across the board, even though these two are pretty neutral. Yeah, I mean, it had a lot of gains, which it just gave up again. Or it had a lot of losses, which it recovered that against all the currencies following the interest rate decision. But it's still an overall, at the moment, it looks neutral. But I think overall, it's still a pretty bearish market for the dollar. And they had a bit of a breather with the interest rate decision, monetary policy statement coming out. But I think it's just a breather. I think it's just an opportunity to get into the market again. So all of these indicate a neutral market, although we know in the short term the dollar has been stronger since the monetary policy came out. and gold has been selling off. You'll always see a correlation between the dollar and gold. You know, if the dollar index goes up, gold will go down. You'll always see that correlation because, you know, the gold futures is actually paired against the dollar, so that makes sense. You know, if the dollar goes down, gold goes up, and vice versa. So that's what we have to look forward to today. A pretty neutral market with some opportunities presented by that monetary policy and another interest rate decision and consumer price index coming out today. So that being said, let's move over to the charts. So as we can see, here's what I said. We've got an opportunity on gold to buy again. It's been coming up pretty good. Now, I had those orders yesterday that I made some money on. I had one up here that I took profit. I had a few of them where I took profit. These two are still open, but I expect this price to recover to those levels. And then I've got another trade open here, so buying the dip. And now I'm just hoping for it to get back to that level. Well, I'm not hoping. I'm pretty sure it will, because this would be what would resemble a ranging market again. So if you go to this, look at this level there. It's bounced off it. So I expect this to range between that level and this level until we get a new breakout. So it should get back to this price where my previous trades were. I need to move that down. Obviously, that monetary policy decision that I didn't trade changed that potential take profit. So it's back to down here, and yeah, I mean we'll look to trade both of them up to there and then get out, unless there's a break to the upside again. That would be nice. I mean, if it breaks this level, we could see it potentially move all the way to there, like I said. But little breather on the dollar gave us good opportunity on gold. You'll see the same thing, or should see the same thing on silver. Oh no, silver just did nothing. Very stable currency, silver. I mean, an interest rate decision, monetary policy decision that moved just about every other currency paid with the dollar. Didn't affect silver at all. So, I mean, look at this. And, well, the yen is also doing nothing at the moment. Dollar up against the Swissy, up against Canadian dollar, stronger against the Kiwi, slightly stronger against the pound, a lot stronger against the euro. The euro is being punished across multiple currencies. I took good profits here as well. I had good profits on the euro pound pair. Where is that? Oh, yeah, it's right here next to me. I had good profits here. I still have some open, actually. Take profit level down there. Expect to see that shortly. So I've got that one open from there, this one from there, then added another one. Should see it hit that level, at which point all three trades will take profit. I could just close them out now. I mean, I'm in the money on all of them, so I could just close them out now, but I'm going to leave them and see if they hit my take profit. It is at I said I could potentially look to do it. This is fair value price at these three dojis. That's a fair value price. So it hit that level and bounced off. It came back and now it's struggling to break through. When it does break through, it'll obviously go to this level there, because there's dojis there as well. You can see them. This line's a little high. It needs to be right on the dojis. There we go. So that's the next fair value price. So if it breaks this level where price is at, or no, this level where the price is at the moment, it'll easily hit my take profit and potentially move further down to this fair value price. So my take profit is at the very next fair value price. As you can see, bunch of dojis there. That's fair value. And then the next one is there. Then we've got this resistance drawn from the daily that goes back, quite far. I'm not going to go back into the details of that, but we've got a pretty good chance that if this breaks this level, it'll hit my take profit, which is why I'm leaving them. And I mean, the euro, as I said, is getting pounded. Pardon the pun. Yeah, the euro is getting punished across the board. So I'm happy to leave this to just see it trigger my take profit there. All three of them at the same time, which is not bad. I mean, I'll make some money from that. Okay, so let's did I show you gold? Yeah, I think I showed you gold. Yeah, we did look at gold. So obviously there was an opportunity. You could still get in, but the higher up it goes, the riskier the opportunity becomes. So I'm happy getting in right at the bottom there. Buying the dips is always fun. Now, if you couldn't spot this level, look at that. Look at that. Remember that multiple resistance levels will definitely become a support level, and it became support there, there, there. So you could easily spot this level. You could just see it. You didn't have to guess or, consult a crystal ball or read tarot cards to find this level. It's literally there. There it is. You can see it quite clearly. It's not difficult. So there's the level. Bam. Got in there, pushed up. This trade's in money. This one's negative. They should balance out soon. Once it gets to the middle, they'll be balanced out. Once it gets there, it's pure profit all the way to the top. So yeah, I expect this to range. Don't go higher than this level because you see that doji there. Rejection wick, not a doji. It's a rejection wick there, and those all met resistance at that level. So at the moment, it can't break it. When it was still respecting this uptrend, we had a potential for it to go higher, much higher, to that level or that level. But obviously it broke this trend line and now it's pushing down. So if it pushes down further to this level, that's another opportunity. I mean, you can clearly see there's a level there. Actually slightly higher. We want to hit as many of these as we can. So we'll go on this one. Then it triggers 5. 1, 2, 3, 4, 5. If it hits that level, we can go long again. Another buying the dip opportunity. Of course, if it breaks this trend line, if it does reach that level, we should be cautious because this trend line needs to hold. This is the bigger picture trend line. But yeah, I mean, I think it's holding now. If you move this point to there, and here's the other point. Let's just zoom out. Move this out of the way, grab that one, push it there, zoom back in, move to the end. Yeah, it's touching. So yeah, it needs to respect that level. And if it doesn't, get out. So yeah, let's just close this so that we can have a bigger view. Yeah, so watch it respect this level. And if it doesn't respect the level, then it could be long-term shorts. But I don't think so. I think gold is as reserve a currency or commodity as you can find, and it can't really go too low. I know everyone predicted the 1800 level, but I'm yet to see that, so I'm not optimistic that they'll see it. I don't think they'll see it, but what do I know? I'm not an economist. I'm just a forex trader. So okay, so we'll move on. We had gold. I expect this to push up again, to be ranging. Gold ranging. Remember, everything was neutral. Euro pound. That doji's gone red. It's almost at take profit. It should keep going down to this level, I think, in total. It could reverse there, or it could just bounce from there, but it'll probably just trigger that. Euro yen still going down. Tried to go up, but I think it's going to keep going down. This is such a, I mean, if you add a fan to this, I don't want to do it because it's quite an effort to add, but let's do it. Let's insert line by angle. So what you're looking for here is 360 minus 45. Okay, that needs to be 315, but it's close enough. You insert your GAN fan in there, add it at the 45-degree angle, take out the line, okay, now I can't select the line, that's fine, got it, there we go. So if you look at this, it's respecting this 45-degree angle. That is extreme trending. If you move the same thing over, you can move it to this point. This is what a standard angle looks like, you know, trading first there, then broke through, lost more momentum. This was ranging, more momentum. Next one, more momentum. Now it moved from one to the next one, and for the next one or the same one, kept within it, and then it came back to this one, respected this one, and then pushed down so far. So it needs to come back to this line again to be a decent or a normal trend. This is why the arrow I drew here, you know, reflected it to go there, you know, 2 candles later than when it actually did. Because the trend is just too extreme. It's too good of an angle. So, I mean, the euro is getting punished, but it needs to start recovering somewhere and come back to this line. If it can still go down, but it needs to come. This is all what we refer to as oversold territory. It needs to come back to median, and you know, then it can keep going down. So anyway, that was just for illustration purposes. A lot of people don't even use the GAN fans. I won't recommend it. It's a lot of effort for something you can get with a normal trend line anyway. Okay, so Aussie fighting back. We saw the data give it this long push up. It hit that retracement level, 100% retracement level, and just came down immediately, which is, as you know, a rejection price. So this should technically come down now, but it's fighting back and is ranging at the moment. So, I mean, we'll keep an eye on it against the loonie. It could go either way. So watch it, see if it comes down again. But I think Australia is just such a strong market, such a strong economy that compared to other countries now specifically, although Canada is strong as well, I guess. They have a few issues, but not nearly as many as compared to a lot of, you know, other countries like America is scrambling at the moment. Pre-election, pandemic, everything working against them. So these two are pretty stable, I think. Canada and the Aussie are pretty stable. So yeah, this looks like a channel, doesn't it? Let's see. So on the Aussie Swissy, oh no, that's not even close. Let me just, oh, it moved it automatically. That's beautiful. So that is a trend line. You can rate this and see it respecting that. So this should go up. It should definitely go up. Respecting that trend line is a good indicator that it wants to go up. Because it is ranging at the moment, but it's also been respecting that trend. So I think we can look for a push to the upside. Euro's getting punished, and the Aussie had a good day, so we should see it reach this level again, there where it stopped. Bam. So you could short this, take profit there. Well, you'll notice that we did eventually reach our 61600 level there. This was prior to the Aussie employment changes, or employment data coming out. That data came out there. So we hit our level here, regardless of the actual data, which just reaffirmed it. So I think this will go down again, although it's rejected this level twice. I think it's risky to trade it to the downside. But yeah, I mean, the Aussie is strong and the euro is weak, so but it needs to change. The euro can't keep getting punished, indefinitely. That needs to change. So at this level there, this trend, so it's respecting that line multiple times, and then keep an eye on it. If it respects it at the upper end again, now if this pushes up to there, you could short it to there. But if it breaks, then it's going to look to push back to this level. So that's an opportunity. I think keep an eye on this. Okay, this is the Aussie yen. It's been pushing down. I mean, it should come back a bit and then push down again. This is ranging. It broke out and then came back. As we know, with the employment data, came back. So now it's going to keep ranging again. Aussie dollar, I mean, the dollar got stronger across the board, but it gave up some of its gains already. So you could add a Fibonacci in here and then potentially look at the 50% line. This is a Fibonacci extension line, not the retracement, but the 50 line remains the same regardless of what side you're on. So as well as the 61.8 and the 38.2 is, also they remain where they are. So yeah, you could look for a retracement there to the 50 if it doesn't keep pushing down again. But the Aussie is strong, so I mean, but the dollar is stronger, so you're fighting with two bullish outlooks. My advice would be just not to trade it at all. So, but that's up to you. It already did the 61.8 retracement on this candle. Well, it wasn't the 61. It was probably the 50 at the time. We'll check that quickly. No, it was just above the 61. So you'll see it retrace there. Anyway, so I myself will not trade this today. I'll stay out of this. There are easier pairs to trade, like this one. If you really want to go on the Aussie, rather go to this pair or this one. Well, yeah, I won't trade this one. I'd rather trade this one, but that's just me. You can trade this one as well, but I won't trade this one. Both of them have bullish sentiments, so maybe stay out. Yeah, Euro CHF. Just want to show you something. If you take this thing and just move it, that's going to be your new channel. There we go. So if it keeps with the trends, it should hit that level and bounce off to the downside. So you could potentially see a move down to here, which is sad for the euro, but I mean, this is the breakout, so we need to obviously keep an eye on that. Yeah, dollar got stronger, euro is weak, that's expected. Pound, Dollar got stronger, but it hit a level because the pound's fighting back. Kiwi, dollar got stronger against the Kiwi up to that level, bounced off that level. You'll see it's a key resistance, key support. Resistance turns support, so watch the dojis. And then you'll see the dollar stronger across the board. So, I mean, that's pretty much it. Dollar is bullish, but it's hit key levels, so it's bouncing off now. So wait for the breakthroughs. Anyway, that's it for my video for today. I hope it helps. Good luck and enjoy.